today on ScreenSaver Minute, we are so excited to have Tax Director Alan Gill with us. We appreciate you being here with us, Alan, as he's here to give some of you, our viewers, some great tips. We know it's that dreadful time of the year where we have to file those tax returns, so we appreciate you being here. So could you please give us a little bit of your background, particularly your professional background?
Sure. I appreciate you having me, first and foremost. Again, I'm Alan Gill. I'm a tax director currently for a mortgage servicing company out in the Fort Worth area. I've been in the business now about 15 years.
Awesome. Well, thank you for being here, and we'll get started. Our first question that we want to ask, we know a lot of our viewers would certainly find helpful, is what are some of the common errors most people do when they're filing their tax return?
Well, one of the main errors, won't go into too many of them. Let me just talk about one first and foremost, and that is mathematical errors.
How would you mean?
Well, I've done it myself, and so in this day and age, still a lot of people are doing tax returns by hand, in which when you do it by hand, you got to have the math miscalculation. And so we, as tax professionals, we try to get people who are going to tackle that, doing their tax return on their own. We try to move them into the tax software that has the built-in calculations that can do that for you. Okay. But the most important thing in doing that is still inputting the correct information. Absolutely. I mean, if you're gonna, making a input error of, say, if it's supposed to be $5,300 and you put $3,500 in, it can make a big difference. Which one would probably warrant a notice from the IRS.
Wow, right. So it's really important, and I guess you're saying if you have the software, it helps kind of eliminate and reduce some of possibly the mathematical errors.
Yes.
But if you do enter it, you want to make sure that you're going and double checking. That's a good point. Very good point. So moving into some other great tips that I know a lot of our listeners would certainly appreciate. What are some less common deductions people can claim that often they overlook? I know we're all looking for ways to bring us down in that lower tax bracket. So can you kind of speak to that?
Well, let's first start off about deductions.
Okay.
Because not everyone is able to deduct things on their tax return. The IRS gives us a standard deduction.
Okay.
And if we're going to take deductions in excess of that standard deduction, it's called itemized deductions. Okay. So they have to exceed the standard deduction. For instance, marriage filing joint is $12,600 standard deduction. Okay. So if we're going to itemize or we're going to deduct things on our tax return, it has to be in excess of that. And so one of the common overlooked deductions that I found was the sales tax deduction. The IRS gives us the ability to deduct sales tax that we've paid throughout the year.
Okay.
Now, that's important for those people who live in the states that have state income tax, because the IRS says you can either deduct your state income tax or you can deduct the sales tax, whichever is greater. But for us who reside in Texas,
right,
we don't have a state income tax, right. So it's just a foregone conclusion that the sales tax is the best way to go.
Really? Okay. And when you say sales tax, that's on anything that you purchase, groceries, of course, big and small items.
Yes.
That you can calculate that as part of your sales tax.
Now, there's two different ways that you can do it. You can either keep all your receipts throughout the year, which some people may do. I'm a tax professional, and I don't.
That would drive me crazy.
Yeah, and so when we push people into doing the program that we talked about, that it's built into the system where you select your state, and then you select you input your state tax rate, and then it calculates it. It's kind of a formula driven on income, and so they'll calculate that. Or you can input you can look at all your receipts, add them all up for all the sales tax, and you can input that number. There are some big ticket items that you can put in there, like if you buy a car, then you have sales tax on the car, or some appliances and things of that nature that you can do, that you can input.
You definitely would have to keep that documentation if you chose that route to deduct those sales.
Oh yes, it's very important to keep all documentation that you use on your tax return.
Okay. I know that some of our listeners out there, or viewers, are self-employed, and so I know myself personally, being self-employed, you're always looking for ways that you can reduce the self-employment tax. So could you provide some great tips on that, on how to do that?
Well, I would say the number one thing for self-employed people is to keep accurate records.
Okay.
Anything that is ordinary and necessary in the course of your business, you can deduct those, which, for a self-employed person, you can, that goes on a Schedule C.
Okay.
And so the net profit of your business, that's what you're going to end up paying your self-employment tax on, okay? And so I always tell people to keep all the records that's related to your business, the miles that you drive on your car, if you're in business for yourself and things of that nature. So it's very important to you keep all those records, because some things we can miss, like for instance, the miles on your car. Some people may not do that.
Right.
And office supplies or stuff like that that you use in the course of your ordinary and necessary course of your business.
And offset.
So you can offset that. And then, but also, if you're able to, if the person who's self-employed, if you're able to start a S corp or an LLC that makes an S corp election, you can minimize some of your self-employment tax by giving yourself a reasonable compensation. So what the IRS says, anyone who's operating an S corporation, they can give themselves a reasonable salary or compensation, and then they will pay self-employment tax on that. And then the net profit of that S corp, you can distribute it at the end of the year, and that's just a return of basis. And that's just a return of what you put into the business. Okay,
and so by reasonable, is it what's competitive in the market?
Well, the IRS didn't define what reasonable is. So one state could be is what is the market going for whatever business that you may be in. Yeah.
Wow, that's a great tip. That is a great tip. Thank you. So another great question that I know a lot of our listeners would appreciate is, what is the most important thing that you could do if you're the unlucky one, or lucky one for that matter, that gets the notification that you're that you are going to be audited? Can you kind of share what you think is the most important thing that you can do?
Well, I tell people, any time that you get a notice or a notice to audit, the number one thing for anyone to do is to remain calm. When they get a notice from the IRS, you always want to just, oh my God, the world is coming to an end and all that. Yeah, but that's not necessarily true. As long as you can remain calm, and then it's very important that you keep records to support your return. If the IRS contacts you about an audit, again, remain calm. If they ask you to respond by a certain time, you want to make sure that you do that, because you do not want the IRS coming after you.
No, you do
not.
Because
they will.
That's right.
And then, again, it's just keeping all documentation that supports your return. So when the auditor comes in, they'll look at your stuff, they'll look at what you input into the return, and if it all checks out, it's not necessarily, I just want people to understand that an audit doesn't necessarily mean that you did anything wrong, because it's just random.
Sure.
The IRS doesn't, it's just random.
Well, and to that point, you talked about make sure that you provide documentation to support the return. How long should you keep that documentation?
You should keep it a minimum of 3 years.
Really, 3 years? Yeah. Okay, sure. And then after that,
you're pretty safe.
Okay, sure. We thank you for being a part of this, and I know our listeners are certainly going to appreciate some of these great tips that you offered. Thank you so much for joining us on ScreenSaver Minute. Have a great day.